Body is Common Sense Investor coming at you with another video. Breaking news on two fronts. Number one is going to be Ryan Cohen couldn't help himself. He had to sell 75 million shares and stop the run-up that's happening right here. All right. And then we have this big fall ever since he's announced the dilution. But understand something, people. I told y'all this is run by algorithm. Look at AMC's price. Look at GME's price. They cannot stop what's about to happen to them. Only the smart ones will survive. And those are the ones that are buying up these shares. These 75 million shares, this is a favor to y'all. You better get them now because this shit's fixing to go to the stratosphere. Okay? If that's the furthest it goes out there. I don't know how all that science shit. But it's fixing to go to the moon. They can't stop it. Look at it. Look at it. All right? You can't stop this. Now, also, they just released an NBC interview that y'all should watch. It's going to be talking about Keith Gill. It's going to be talking about the meeting that he's going to have today and what he should be saying on his live stream. Check it out. Watch it. Stay informed. Stay alert. Get ready. Have your battle plan, meaning your exit strategy, in place. All right? Now, just to let you know before I show you that clip, the 4 options I got, if this bitch runs to 11, one of them's gone. Just one. All right? Because I got plans and goals for that, the money from that one. All right? Then as we go up, we'll discuss more about where I sell at. But right now, my first goal is going to be somewhere around $11 to where I can sell one of them options. And I'll tell y'all how much I made and what I'm going to do with the money whenever we get ready to do it. But they can't stop it. It makes me mad, though, that Roaring Kitty's got them in a box right now, and Morgan Stanley needed to come up with 12 million shares, and Ryan Cohen's going to drop 75 million shares onto the market. So you know Morgan Stanley's picking them up, even though they're picking them up at a pretty penny. Love y'all. Watch the CNBC interview of Roaring Kitty and what to expect today. Love y'all. Be blessed. See you in the next video.
I'm going to go back to your past life at E-Trade. Would you have banned Roaring Kitty? Do you think there's a reason to ban him? And also, for E-Trade, for a company that's a trading platform, are there consequences for banning somebody who's really become a cult hero?
Yeah, it's an interesting question. I mean, the way that you have to look at this is, as E-Trade, and just so everybody's aware, I did not work at Morgan Stanley, following the acquisition of E-Trade. I wasn't involved at Morgan Stanley. So what I talk about here is really just about my prior life in E-Trade and my own personal views. The way that I look at the situation is you need to take a look at the customer agreement, right? Has Mr. Gill in any way violated the customer agreement that he has with E-Trade? Has he committed any crimes? Is he suspected of committing any crimes? Did he come in clean? Did he pass AML, KYC? So did he get through everything that he needed to? If you check all of those boxes, absent additional facts and circumstances, I don't see anything here that would lead me, right, in my former capacity, to either ask him to leave or what we used to call NFB, right, no further business letters, to go out to Mr. Gill. It's one of those situations that you really need to keep a close eye on. If they have additional facts and circumstances that they know that there was a crime or there was some suspicion of a crime, sure, then it's probably time for him to go. But I don't see anything right now that would lead me to believe that he needs to leave the platform. In terms of the second part of your question, when I look at where we are today and reputational risk and how quickly things travel, that's really what it comes down to, right? Do you want to be the platform that claims to be democratizing retail investing and trading and then pushing somebody out because you're afraid of the consequences? To me, that leaves a reputational risk from active traders across your platform who could revolt and rebel. I'd welcome someone like this to actually help investors and traders really come back onto the platform, right? It's a learning experience for everyone at this point.
Yeah, I've talked to quite a few traders that say banning him would just be bad for business because right now the fact that he's on E-Trade making all these moves is actually bringing a lot of attention to E-Trade basically for free. Michael, I'm going to come over to you. Keith Gill, Roaring Kitty, goes from $53,000 to possibly, at least on paper, $1 billion, kind of the Horatio Alger of Reddit, if you will. But these moves, all that's going on, does this warrant in your mind an SEC investigation? I mean, should regulators take a closer look? Should they be looking at this as possible market manipulation or some other, illegal thing?
Oh, I have no doubt that the SEC is already looking at this, investigating it as possible market manipulation. But here's the key point, right? So as Carl pointed out, there's nothing obvious about what he's doing that is illegal under the current rules. But the key point of this is that the SEC, if they view that this trading that is not good for the market, consistent with maintaining fair, orderly, and efficient markets, they could actually change the rules. And, what's happening today is not new. This is deja vu all over again. We saw this 3 years ago in January of 2021 with the meme stock trading frenzy. And after that, there were 4 hearings on Congress. I testified at 2 of them. The SEC did a study, and they went forward with some market structure reforms, which, some of them were needed, some were not. But they didn't address the underlying issue about the fact that there's possible market manipulation that's going on in the current markets that is not caught under the current rules, and they could have changed the rule set, but they've spent 3 years doing nothing. So 3 years ago, they got a meme stock frenzy wake-up call, and they hit the snooze button.
So you're being pretty critical. You're saying that they had the time before during the so-called Reddit rebellion to make some changes, and during the time since, they haven't really taken action.
Correct. If you look at what happened after that trading, they did a study and they came out with some recommendations, and the recommendations didn't flow from exactly what was happening in the trading. And they kind of thought, all right, it was maybe some FOMO going on during the pandemic, right. Maybe people using their stimulus checks, but they didn't address the underlying issue where you've got social media now where it allows people to act in groups and trade on the same side, where retail traders are now able to do the same thing that some institutional traders have possibly been doing, and they haven't addressed that.
So, Michael, you mentioned some of the testimony you did. I want to go back to the fact that Gil, he was actually called to Capitol Hill back in February of 2021. We're going to show a little bit of his testimony. He straightens out some things about who he is as far as a species and a few other things. Take a listen.
A few things I am not. I am not a cat. I am not an institutional investor, nor am I a hedge fund. I do not have clients, and I do not provide personalized investment advice for fees or commissions. I'm just an individual whose investment in GameStop and posts on social media were based upon my own research and analysis.
All right, so Michael, I'm going to come back to you. He's not a cat. He's also not a hedge fund. You mentioned that you wouldn't give him the NFB letter. That's not something that sounds like you would do. But what would you do? I mean, he's having such a big influence. Is he simply good for business, or is he a possible business risk in your mind if you're at E-Trade?
So you're directing that back to me or to Michael?
Oh, I'm sorry, Michael.
Oh, yeah. So, I mean, look, Carl, folks like Carl and E-Trade, right? They're between a rock and a hard place here, right? On the one hand, if they find illegal activity, they're obligated to get rid of the person. On the other hand, if it's this gray area where the SEC is actually not bringing anything, they're kind of stuck. And Carl laid it out very well. There's the business case. On the one hand, if you get rid of the person, you can get some negative press. On the other hand, you don't want to have, possible manipulative behavior on the platform. So, Carl laid out really, how difficult it is for the business case for this.
Yeah, Carl, I apologize, Carl. I got it mixed up there. So I'm going to finish off with you. What now? What now? I mean, if you're someone like an E-Trade, I know your former company, you weren't there when Morgan Stanley took it over. Would you be looking for any signs that possibly as an outside investor, would that even be a concern? Are there other concerns that maybe we're not looking at right now?
Look, I think you need to keep an eye on what's happening on your platform at all times. And there are, trust me, there are tons of people at E-Trade who focus on nothing other than this. So behavior that may seem atypical or trades that come in that just don't make any sense, right? But from all things I've seen, this just does not appear to be, fit in any one of the categories. But just to finish on a point that Michael made, right? Retail investors need to have that same playing field as the big boys do. Think about, what happens at conferences where hedge funds talk about their positions and they go out into the marketplace and talk about how they're seeking alpha, right? Or even what happens on Cramer's show in terms of, the great sort of insights that he gives into so many companies. From what I've seen, Mr. Gill is doing the same thing so far. If it is even him, they haven't proven this all out yet. Right. So I think right now it's a wait and see. Will will be tuning in today on, on his broadcast.
Gentlemen, we're almost out of time, but I want to ask both of you, Michael and Carl. Carl, why don't you go first? Live stream coming up at noon today, supposedly. What are you going to be listening for? Is there one thing that you're looking for, listening for?
I just want to see if he's taking the same approach that he did last time, because given where the stock is and you look at the fundamentals of GameStop, in my mind, it's very difficult to make an argument that this can still be a successful company or it's someplace that you need to get into. I think everyone needs to do their own personal risk assessment when they take a look at stocks like this, because there is a lot of downside risk here. But I'd be very curious to see how he approaches this one, because I think it's a very different situation than we've had during the pandemic.
Michael?
Yeah, same thing. I mean, the first time around, he was trying to make the business case why, a brick and mortars shop could survive in today's world. What he's doing this time around seems to be just putting out some memes and stock. So memes and stuff. So it'd be interesting to see if he actually can make the business case for the fundamentals for the stock.